Start of a new week. This is a late pre-open analysis. I was tied up with football on the weekend, so I didn't manage to get out a video for the pre-open. But as usual, the gold analysis that I do for FX Street was posted on Sunday pre-open, um, talking about bears licking their lips, watching for lower time frame distribution. So again, going over the analysis prior, which called out the break of the trend line on a weekly basis. That gave rise to a significant change of character, and this was all called prior to it happening. Um, and then in the update to the gold price, we're talking about how the US dollar has met support. There's potential of a correction on the backside of the trend lines here, a potential move up into price imbalances and so on, which would be bearish. For the meantime, for gold, it has managed to eke out a fresh corrective high on the day. That wasn't ruled out in the analysis, though. We talked about how it can move up into here and come back down, all the while it stays on the front side of this trend line. Now, if I can just get out of here and go to the live market. So gold has, as I said, moved into that resistance, sort of eking in there a little bit, but it's now on the back side of the trend line that was drawn. I don't know if you can see that here. I've switched to other drawings template, so it's a different color. Anyway, so we're on the back side now of that. It's Monday, so we're establishing potentially a high for the week. This could continue up to potentially establish a high for Tuesday. But we're looking for the signs of distribution, deceleration of the correction. We're starting to see that. We've got some of these support areas to be looking out for. Again, it's all explained on the article. If you want to go to FX Street's website, you'll see it there, with this title in the analysis section. Just type in gold, put in my name. You'll pick up my articles from recent content, and it will be in here somewhere. All right, so you just need to pick up on that, and then we're looking for a move into these structures. They've been highlighted here for significant targets on the charts. Again, we're talking about it being Monday, establishing potential high. Tuesday could be the high. We've got all of this length that's been built up below these higher lows that is up for grabs for the week ahead if we don't just continue higher. But I would say we are due for a correction, and if we bring up the weekly chart, we can see how we've come up into a potential area of resistance. As I said, not to say that this isn't able to go higher. It obviously can, but now that we're on the backside of the trend lines on the lower time frames, I would be anticipation of some opportunity to the downside. This is a W formation. It's an overextended W formation, but a move into 1750, 1730. Sorry, 1750 being the first target, and below there 1730 to meet up with this price imbalance between here and there. And then in the same vein, we've got the US dollar, which is somewhat overextended on the downside. Potentially, it's moved into this area of support. We can see a correction back up into this price imbalance over here on the lower time frames. It's a price imbalance between there and here. And this is sort of a lopsided M formation that likely requires a move up over the course of the next couple of days, with bond yield still on the rise, despite there's that correction and bounce higher, despite, and that again is an M formation, and that is despite the risk on sentiment that we've been seeing with the welcomed US CPI report from Friday, so remaining robust from support. We've broken the back end of these trend lines, however, so that's want to be noting that as well. So there is pressure to the downside while below these trend lines that have broken. This one not so much, but this one very much so. Give that a dashed appearance to show that it's been broken. But we can still have the. I'll just turn the screen white for the sake of to see what's going on. Done my drawings in white. But yeah, we can see that a correction into there. We've got the Fibonacci 38.2 that's coming into at the moment. And that's on the 10 year, the 2 years, which tend to be more sensitive to Fed sentiment. So I wasn't active today in trading, just catching up on some very much needed sleep and taking it easy to start this week. But on the US dollar, the yen, it's worth noting that there was a really nice opportunity into the US session for a scale back of the length that was put in throughout the day. This M formation over here. On the 15-minute chart, that's where the opportunity was really, with the break of structure, change in character, a move back into the peak formation, and a final breakdown of that for the day. Back end of the trend line, the 1-minute chart was the entry. On this significant candle here. So you had the trapped volume up high, then the high was getting locked in. You have this M formation, a retest into that. Now you could have taken it on this, but wary of the support over here. But the pin and the engulfment was a sure bet for a really nice trade on the day. I mean, you can do a 78.6 above the resistance there for a nice tight stop loss. So drawing the 78.6, let's do that, of the impulse, and the stop loss could be above here, targeting all the way back into the order block of the move to the order block, which was down here for a nice 3.7R, 3.5R after commissions, etc. spread. So that would have been the ideal trade coming into the US session for today. Now, on the calendar for the week, I would say it's going to be sentiment driven. We got US retail sales, Chinese activity data, some UK stuff. I'm doing this blindly, I think. Let me check it. It's with, is it inflation? I don't recall. 1 minute. We've got the Canadian CPI, US retail sales. These are all out on the 16th. Fed speakers, as from today, we had, start of the week, we had Waller coming out, who was pretty hawkish, flipped the switch on the US CPI. So he was saying that it was too soon just because of one data to be forecasting a pivot. So all of this week we'll have Fed speakers potentially pushing back on the overly dovish market reaction to the CPI report. So that's something to bear in mind to put the bid into the dollar and offers into gold and so forth, commodity currencies, etc., and high beta stuff on Wall Street. Then we've got the UK autumn statement on the 17th. Before that, we've got inflation and we've got labour market data tomorrow. So inflation the 16th, labour market data tomorrow, being Tuesday. Chinese activity data tonight. It's Monday at the moment, so I'm talking about Tuesday Asia. And then we've got the Aussie labour market data as well this week, on the 16th, 17th. So I would say it is going to be a sentiment driven week, and we will look at things as we go, coming into sessions, applying the Stacey Burke methodology and smart money concepts.